Yeah, what's up, Tim? Right back to it. So, I want to quickly brief everyone about what order block really is. I see a lot of people making mistakes with order blocks, and I have a small team that I'm working with. So, I'd like to pass this information to my guys so they can better understand my signals when I drop them. So, order blocks refer to specific price areas where we have like significant buy or sell orders, as I have outlined on the screen. So it means whenever you see another block, it means institutions have actually made their sales from that level, either buying or selling from that level. So it makes that area an area of an area of significant movement. So it's like a potential demand or supply area. You understand? So, and when it has not been tested, it means this area is a potential area for institutional move. So, clusters of orders are present in these areas, which can have an impact on price movement, liquidity, and market sentiment. So, like I said, it makes this area, especially when it hasn't been retested or it hasn't been mitigated. So it makes this area an area of very potential movements of large price action, especially with institutional candlesticks. So the concept of order block is a certain type of approach for identifying key levels of support and resistance based on behavior of institutional traders. These key levels are then used as an entry or exit point. So now that's the point. Now, order blocks are, when identified properly, can be used as very good entry points. Very, very good entry points. Like I have outlined here on BTC USD currently, which is currently at 82,720. Although this was not my primary means of entry, other block was just, and I'm going to say this, other block cannot be used as your sole means of entry or for trading. If you have a strategy and you're just trading only other blocks, then you're a clown to yourself. So you need to put in different models to actually maybe other block now can now be part of your model to improve your strategy, and then that's fine. So now, but I want to show you what another block looks like and how to identify it. Now let's go to my 4-hour time frame here. I have an order block right here. You can see this long rectangle bar. So now this is another block. So another block is basically when you have a big move. How I like to identify other blocks. A lot of people have different ways of identifying other blocks, but as for me, an order block is when you have an institutional move, either upward or downwards, like we have here. You are seeing an institutional move here, either downwards. In this case, we have an institutional move downwards. An institutional move is where you have large candlesticks, like very long candlesticks, dropping or to the upside, pumping. You understand? So in this case, we have large institutional candlestick, like very long. They are not like as wiki and short as all this, like very long candlestick. Then the course, and while that candlestick is forming, there must be an anchor. You understand? So the course of that anchor forming will give you an order block, like in this case here. So usually I like to go with, when the candlestick forms, I like to go with the bearish or bullish candle that's formed before that institutional move. You understand? And it must be a bearish engulfing, which means the bearish candlesticks must override the previous bullish candlestick, or the bullish candlestick must override the previous bearish candlestick. This is now showing that we have potential we have potential. We have the potential of sellers overcoming the buyers. You understand? In this case, you understand. So it means from the candlestick, because candlesticks, all these candlesticks, another block, everything in general, they are price action. And what does price action do? Price action is, depicting what human behavior is doing in the market. So what this candlestick is telling you is that price, in this case, is, sellers are overcoming the buyers movement, and that's what we should be looking for. And you can see during the retest of this order block, although I had made this entry because before this order block, but this order block was just like a means of it was just like a means of a second entry for me. Although I didn't use it, but I used it as more of a confirmation for myself. So you can see that when price go to this level, due to the fact that this is a potential institutional level where buyers had previously made their entry to sell, institutions had previously made their entry to sell, then you can see that the retracement made a very big spike from this level and dropped down with an even bigger institutional candle and moved to the downside. And ever since, price has been bearish, going to the downside. Yes, this is what order blocks does, but this is not enough. This is not enough to trade. You cannot say because you know this now you want to go to the market and start looking for other blocks. You are just going to blow your account, because trading is probability, and it is a game of probability, which means you have to look for a system that has higher probability, and trading other blocks alone does not have a high probability. You understand? You might, if you have to trade other blocks alone, you might end up with a 20 or 30% win rate, because 100%, 70 to 80% of the time you are going to be failing entries, and you are going to be missing out, and some other blocks will probably not work. You understand what I'm saying? So that's just it. So, and remember, for the other block to be valid, remember what I taught you about price action. If you haven't watched price action, go to my previous video to watch what market structure is. Now, in order for another block to be valid, price has to form an anchor and break above that anchor. You understand? So it has to, for an anchor to be properly formed, it has to be like a swing high, swing low, and a new swing high. So it's more like an higher high, higher low, and a new higher high. So the form of that new higher high, like you are seeing, is where the other block will be found, which is try to find the bearish candlestick before the institutional move upwards, or the bullish candlestick before the institutional move downwards. I believe this is clear enough. Thank you very much.